Hello traders, today is the 10th of February 2013 and the time in London is 57 minutes past 4 p.m. In New York, 57 minutes past 11 a.m. Happy Sunday to you all. This video is about the formation of a bearish bat pattern. Okay, when and where do we see a bearish bat pattern? How, okay, does a bearish pattern develop the anatomy and the physiology of a bat pattern? We want to know. We want to not only to know with our head, we want to know with our head and understand also with our heart, so we can understand what is taking place. All right, because very often traders will know the pattern, okay, they will read about it, they will learn about it, but they will not understand, okay, how the pattern form, where the pattern, because for instance, if I see a bearish bar pattern in the wrong place, I will be very, very careful, okay? So this is about practical trading tips when we are using, okay, the bearish bar pattern. Let's get started, all right? So we see here the bar pattern, the first condition, the bar pattern, the bearish bar pattern must be formed at the end of an uptrend. Very, very important. If we see in the wrong place, we need to trade it carefully. So the price was in an uptrend up to this level, you see, bullish, okay? So if we see a bearish bar pattern somewhere here, it's in the right place, all right? So when a bullish, okay, cycle is completed, talking about the TSTWSY S008 cycle or the Elliott wave cycle, motive wave plus corrective waves, when not Elliott wave cycle, when the motive wave is completed, we are likely talking about the Elliott wave correction traders. When the motive wave is completed, okay, we are likely to see at the end of the motive wave, okay, a bearish bad pattern. Not always, but this is where we usually see it. We want to know the motive wave is formed of 5 waves. 1, 2, 3, 4, 5. This is the trending phase of the Elliott wave cycle. So as I say to you, where and when do we see the bearish bar pattern is at the end, okay, of, okay, okay, a bullish trend. So, but what I'm going to do here, because I'm on a monthly chart, I'm not going to start from here because you can see the price pull back. There were many, many years till we reach this here. I'm going to choose only one session here. The important thing is that the price move for many months. You see here? You see here? I'm on a monthly chart. You can see them on the 4-hour chart, sometimes even on the hourly chart, but it's more solid on the higher time frame. So you can see here from call it 2007, okay, up to nearly 2009, see, up to 2008, okay, the price was moving up, okay. So this is the first condition. Then we will see the price pull back. So there is an uptrend. We want to see a correction. Price must pull back. This is the pullback. This is about the formation, okay, or the bearish bar pattern. I will talk about the conditions now. Okay, color in pinks. No, it's not good. Let's use green. You can see green. Yes, good. So we see. So there is an uptrend. Okay. Then we see a pullback. Okay. Now this pullback, that's what traders, you'll see them very often call it. They will call it XA. Letter X for X-ray at the top of the correction. Letter A at the base of the correction. So uptrend, the top of the uptrend, they call it X. S for X-ray. The pullback, the lower point of the pullback, they call it letter A. A for alpha. So this is XA. You see that very often on the internet, on YouTube, today talking about XA. All I'm saying to you, there should be an uptrend and then a pullback. The next thing for the bad pattern, this is the most important thing for the bad pattern, this pullback. So this pullback is part of the bad pattern. So uptrend, the pullback is part of the bad pattern. Now we want another retracement of the pullback. Price must rally up So you see, dominant force, bearish, which is the correction of the bigger uptrend. But we want again a price to try to go up again. So from here to here, let's color it into black because I don't want the video to be too long. We are talking about the formation of bad pattern. From here to here, this retracement to the XA, now this is A, this point they call it B. So this is B, so this is X, A, B, all right? This AB for the bad correction should not exceed, should not go above the 61.8% Fibonacci retracement level of the SA. So to be fast, I don't want to annoy more experienced traders. So you can see this move to the correction shouldn't be more than 61.8. The 61.8 is here. Shouldn't go above the 61.8. This is for the bad correction formation. So it's now at 50%. Very often you see at a 50%. All right. So uptrend, pull back, rallying the downtrend up to the 50%. We are thinking of the bad correction because it couldn't exceed the 61.8%. Next condition. So this is A here. This is B for Bravo. The next pullback. So price went down, price went up. We want again to pull back again. So rally to the first SA. A retracement of the SA, which is this session. But we want to get a retracement of the AB. This is the AB. That retracement should be between 38.2% and 88.6% Fibonacci retracement level. So which means sometime we want it to, this one to pull back a bit to 38.2% or even down to 88.6%. Sometime you will see it will go even 100%. But you need to understand why the price went to 100% very often is because the smart money want to buy at the best place. But when you see like this, just highlight it. Let's say it was about to form a bad correction, but it went 100%. Just keep eyes on it. Just keep eyes on it and watch it. What's going to happen? But in normal condition, can pull back 38.2%, even 50% or 61.8%, up to 88.6%. The BC, this is the BC. So this is X, A, B, C. In this scenario, I can measure it, how far this went. So I'm going to remove my Fibonacci drawing tool. Is it this one? That's it, that's one. And I want to see how much the BC retrace the AB using my Fibonacci retracement. So it retraced it 61.8, where my cursor is. This move from here to here is 61.8% retracement of the move from here to here. So we have a kind of a criteria for the bad correction, the bad correction. At this point in time, we are thinking of a bearish bad pattern because it still is forming. It's forming. Understand? We are talking about the formation of the bearish bad pattern. It's forming. So as a trader, we are watching and trying to understand which pattern it is, what's going on. But at this point in time, okay, in 2010, trader will be thinking that it should go up, okay, to somewhere here. Let me use my Fibonacci drawing tool. Trader will be expecting, as it reaches the C session, that the D for delta, which is a terminal zone or target zone for this bad pattern, they will be expecting it to come to the zone of 88.6% Fibonacci retracement level. So a lot of traders will draw a line here, expecting the bearish bad pattern to be completed. That's the target zone. Myself, very often, I will just put a hotspot sign there for myself, and I will be expecting it to roll in there. You see now? You see that the price went up for 2 months. This is what I say to traders. When a cycle is about to begin, no one knows how far the cycle will go. But for a bullish cycle to develop and to mature, it must be supported by the market cycle and also by the fundamentals. If the fundamentals are not solid, if the market cycle itself is bearish, there won't be any up move. We may see instead consolidation or even a down move. In this case, you can see that the price couldn't go straight to the 88.6%, but in fact, we have a consolidation. A consolidation is a balanced market, which means the market is neutral. Both bulls and bears, okay, do not know exactly where to bring this, financial instrument. So the price will be consolidated between two levels. But for instance, somebody who receives a bullish signal here, who bought it, he or she will manage the trade and just take profit at the first and nearest resistance level zone. If you are trading like that, you are likely to make excellent decisions all the time. So next level, probably move from one level to the next level. You may either secure your gain or even take profit. Wait for it, you break above it and retest it again. If you find a support, you will continue. If it doesn't find a support, okay, the music has changed. So here, though a lot of traders at this point in time, those who understand the bearish bad pattern, will be expecting the price to move all the way to the pink line here. But it didn't. Even today, it's still down. So all this year for 2010, the price was oscillating between two levels. Before, ladies and gentlemen, I'll close this video. One thing I'll leave you with is that whenever you are trading or whichever tool you are using, always keep eyes on the price and you'll be all right. Even if you don't understand, okay, the Elliott wave or the Fibonacci, and you are somebody who always draw your channels, your line, as I'm doing on this chart, you are likely to make excellent decisions. You can see that from this point onward, a lot of traders will be expecting the price to go to the pink line, but it did not. The price does not have to. Though the pattern was developing or the criteria was formed, we want to see an uptrend and then a pullback. The pullback we call XA. Now, the AB should retrace shouldn't exceed the 61.8% for the bad pattern. Here it stopped at 50%. So the first thing coming to our mind, we are thinking about the bad pattern. The BC retracement to the AB can be between 38.2 up to 88.6%. Here it stopped at 61.8. Verification of another bearish pattern. Next target, we are saying now we have XABC. The next target is 88.6%. Look, but the price did not go. This is since 2010. The formation is still going on. Look now, the price burst up now to the top here. There's a resistance here. So as a conservative trader, we know that a lot of traders are watching this. What do we need to do? You need to go and check the balance sheet, check the management, check the news relating to this, this stock, okay, American stock, Epic Alpha Tango Victor India, okay, ATVI, okay, Activision Blizzard, okay, and you want to know what's going on. Are they gaining more market share? Is the management excellent? Look at the S&P 500. Looking at the S&P 500, S&P 500 is above 1500. It's still a resistance zone. So if you want to be very bullish, you need to be cautious because the market itself, talking about the trading triangle, is in a bearish zone. If the S&P 500 finds support above the 1500 and it continue movement to the outside, we'll give this one a chance, which means we'll just draw the green line here. We can switch to our favorite time frame if we love a 4-hour chart. Our green line is still there. So we want it to break above the green line and find a support and then give us a buy signal above it. And cautiously we'll take it because the market itself is still in a resistance zone. You see now, this is how, okay, we want to use pattern instead of using like robots. And here you see it couldn't reach it here. But sometimes, as you see here, the price may play games like this is doing here, but slowly but gradually at one point, you will see exactly at the target zone. To summarize this video about the bearish bad pattern, we want to see first an uptrend. You see here, from here to here, you will see this pattern on every time frame. Now we want a pullback or a correction of that uptrend. Now, if we see so we want to see like a letter 1, okay? You see what I'm talking about? The number 1. It looks like number 1, yes or no? Okay. So uptrend, pullback. Not 100% pullback, you see. Dominant fall, bearish, a bit of profit taking. Now, that profit taking, we call it XA. Retracement should offer this SA, which is the AB, should not exceed 61.8. Next, the BC, retracement to the AB should be between 38.2 and 88.6. Second criteria of the bearish bar pattern, okay, in formation. It's not yet completed, but it's been reformed, and we are taking advantage of it. Here, if you were here, you will look for opportunity to buy. And when it starts here, the target zone is 88.6%, which is the C to D, okay? Target zone 88.6%. Does not have to. All right, sometimes it may drag on, but finally you see it there. To recognize the bad pattern, it's a pattern that looks like this. Pay attention carefully. I will draw it. I hope I'm not very good drawing. It's a pattern that looks like this, okay? All right. I hope you like my drawing, okay? And the target zone is here. The pattern is completed here. So there is an uptrend, correction, A, B, C. So those who understand in your wave, we want to see motive wave, a bit of a pullback like this to the motive wave. All right. And then we see A, B, C, D chart pattern. All right. Uptrend, correction, A, B, C, D, respecting the criteria that the A to B shouldn't exceed 61.8% of the XA, and the BC should be between 38.2% and 88.6%. Sometimes you will see 100%. So highlight it. Next target zone, 88.6% of the SA. The move from here to here should stop at the 88.6% Fibonacci retracement of the SA, right here. It makes sense? But you want to understand the psychology, so you will see on your chart an up move, a correction, and you see a beautiful double bottom pattern with the second bottom higher than the first one. That's how you will see very often the Fibonacci patterns. But you must also pay attention to the criteria, okay, that I've said to you, the ratio, the Fibonacci ratio of the bar pattern. I hope you have enjoyed this video that you will put into use, okay, to make excellent trading decision. We are the TSTW SYS008 traders. Until the next time, enjoy yourself and be very happy. Speak to you soon. To know more about the to know more about the Fibonacci trading, you need to go to www.dayprotraders.com. Thank you.